Hey, all right, my friend. We're talking about storage of physical gold and silver. The paper prices of gold and silver have been kind of held in check this week, though at least they're not actually going back down either. Just in general, what are your thoughts as we watch the price move back and forth?
Well, I think one of the interesting things is there's been some discussion of the sort of 6-year downtrend line from the 11 high to today, and we're right on the verge of breaking out. I'm not sure whether the number's 1337, something like that, or 1340, but it's in that range. And of course, it goes down every week because it's a sloping downtrend line. So even if we hang in here, we're going to break through it. So I find that quite exciting. And the same thing with silver, that technically they're looking so ready here. We've seen certainly data that would support people are taking more interest in gold and silver now. I think of some of the mainstream people, particularly Jeff Grunlock, who said, well, there's only one thing to buy, that's gold and silver. And we're seeing certain markets stumble, not the stock market, but I'm talking about the bond market and Bitcoin. We should talk about those a little more. That when they stumble, people then look around and wonder, well, what am I going to do here? I was reading an article, a Bloomberg article this morning about how the gold ETFs are getting buying in here, and would suggest that we could easily hit a new 5-year high in gold with the level of buying that's going on. So generally, everything around gold and silver is pretty good, and I think there's some specific things going on in Bitcoin and the bond market that might really propel things forward.
However, at the same time, my friend, just as the open interest and the commitment of trader structure just was flashing a buy signal back in early and mid-December, here we are playing the same old game against the banks, Eric, just since December the 26th, when the price of gold moved up through an important technical indicator, the 200-day moving average. Just since that date, open interest on the COMEX has gone up by 135,000 new contracts that the banks have printed and sold to the speculators seeking gold exposure. 135,000 contracts, Eric. That's 420 metric tons of digital gold that's been created in the last couple of weeks. Are we going to win the fight this time, or do you think we're just, it's just the same old wash and rinse?
Well, they keep trying to whack it down. I guess it was, 2 days ago that sort of at 3:30 in the afternoon or 3 o'clock in the afternoon, somebody came out and sold 2 million ounces of gold in the market and knocked gold down $10.
Yep.
And it looks like that procedure failed, which was good to see. That we're back above the levels that that sale took place. And I think gold's it looks like it's been a lot more resilient against the attacks so far. But that's not to say we've won the game. But I think there are certain things, and maybe I should talk to those. One being Bitcoin. I mean, the fact that the coin retailers have announced that since Bitcoin has fallen here, that the demand for gold, literally physical gold coins and bars, has shot up because people who had made money in Bitcoin, and this is only logical, what do you do when you take your profit, right? If you're going to exit the game, the Bitcoin, the cryptocurrency game, what do you do with your money? You hate banks, you hate fiat currencies. I mean, there's pretty well only one option, that is to go into gold. And so that is happening as we speak. I think the more important thing about Bitcoin is that there's been some studies published, and people, if you just put in Bitcoin manipulation, you can go and find those studies that show, for example, they went back to 2013, and they could see where on certain days when certain bots came in and purchased Bitcoins, that Bitcoin went up on average 4% that day. And over that very short time period at the end of 2013, the price of Bitcoin went from 150 to 1,000. And the conclusion of the study was was totally manipulated. And the sense I'm getting is that all of these unregulated currency exchanges are open to massive manipulation. We see manipulation in regulated markets, Craig.
Right.
Can you imagine what happens in an unregulated market where you can do whatever you want to do? And I think that it seems quite obvious when we look back at the kind of move we had. I mean, this, I don't know how it compares to Tulip Mania, but Tulip Mania probably was the most ridiculous thing the world has ever seen in the financial market. But I got to believe that this is probably way beyond the Tulip Mania, particularly when we got up to $20,000 late last year. And if we all find out that it was just a bunch of guys taking money from people, God forbid what everyone's going to conclude from the whole system. And of course, put that together with the derivatives then beginning to trade in December and the banks getting involved, and let's say they really knew it was manipulated, but they're manipulators too.
Right.
They just end up manipulating it down. So I think that we have to watch Bitcoin here, because I think now that these studies have come out, people are got to be on very, very uncertain ground who purchased these currencies. And I was even reading about the Mount Gox that went down. You know that it stated that there's 650,000 coins lost.
Right.
Well, you know what? There are only 17 million coins so far. 650 were lost. Oh my God! And now I read that there's 853 cryptocurrencies. I mean, it's screaming at you that there's something crazy going on here. So I think that would all be very constructive for gold, what's happened for Bitcoin already, and you know what's likely to happen to Bitcoin. That's kind of my 2 bits worth on it.
No pun intended. Eric.
No pun intended.
You know, and that's the thing. At some point, whether the price keeps rising or if it falls, I mean, there has to be some diversification involved. And you would sure think, like you said, that people that they don't trust the banks, they don't want to go back into, just plain old paper dollars, that bleeds over into physical gold and silver. And that's what was, I think, the most compelling part of the news this week was the massive surge in interest and sales as soon as Bitcoin started to roll over.
And the other thing that I kind of look at that's sort of a macroeconomic thing is this whole bond market with the 10-year now at, got over 2.63, which was Jeff Grunlack's, red line where we're over that, then the stock market starts to feel it. And of course, I'm looking at a stock market that's kind of acting ridiculous too. And if all of a sudden it starts falling apart, now you've got the stock people looking for an exit as well. Plus the bond people, when bond yields go up, the bond owners are losing money here.
Right.
So there's some losses going on in the bond market, and some of those people might want to believe that it's over, and how are you going to redeploy your money if you're going to take it out of the bond market? And when I think of the 10-year U.S. bond, and you read that China wants to lighten up in their treasuries, you see that Japan was a seller of treasuries. Theoretically, the Fed's supposed to be a seller of treasuries. I mean, and then the deficit goes up because of the tax cut. I mean, what could possibly be the positives in the yield going forward? I mean, it just seems like everything's going to work against the owner of the 10-year bond here. So I guess we shouldn't be too surprised to see rates moving the way they are with those huge underpinnings kind of weakening here.
And Eric, I guess for the final question, the main story in the news today is this looming government shutdown here in the U.S., which, whether they resolve that or not, I don't think is that important in the long term, but it is certainly emblematic of the political discord here. And you mentioned interest rates. The U.S., I remember we discussed at the end of last year, is set to issue net issuance of $1.3 trillion worth of treasuries in 2018. It's the highest number since 2010. You've got bond rates then going up, but at the same time, the dollar is falling. It's set to close this week at the lowest level since December of 2014. So there's this kind of cross current there. I mean, can you tie any of that together?
Yeah.
Does any of it make sense?
Yeah, no, there's no doubt that they're all interrelated here. I mean, this whole insanity that's going on in Washington, the whole need to raise more money. Theoretically, the U.S. would have to say to the rest of the world, "Well, we need you to buy the treasuries again," and the world is kind of turning their back a little towards that thought, particularly due to the political uncertainty. So yeah, the dollar weakening, and the dollar could plunge here. I mean, it's hitting serious new lows here that breaking all the technical barriers that you'd expect it to break, and to see it fall to DXY is at 90 cents on the dollar to fall to 80 cents on the dollar. So that would be a huge tailwind for gold here. I mean, that'd be a 12.5% decline. So, do the reverse of that on gold, and you have your next $150 on gold there. So, and if gold ever went up that extra $150, it would technically have broken out, and it would just go crazy.
Exactly.
I mean, we'd have a quite the party. And I think there's lots of other things that we've just discussed that suggest the money's going to have to find a place to satisfy itself that it's not going to lose money. And whether it's Bitcoin or the bond market, and then ultimately the stock market, if they all start weakening, there aren't too many places to go, and we know where the best one is. So we'll keep our fingers crossed on all of that.
That sounds like a deal. I think we will keep our fingers crossed, though it does seem like forces are aligning the right direction here in 2018. It's a very exciting time to be in the metals.
Cryptocurrency News Channel. Your new future. Thank you. Follow us on YouTube.